the market has remained in a state of flux. Now, that makes total sense given we're in the midst of earnings season, where emotions are certainly running higher, on top of the Federal Reserve speakers who just continue to deliver more insights on the Federal Reserve's interest rate hikes to come. Now, I'm going to table all of that for today's video because I really want you all to just walk away with one understanding. A fearful market, which we're living in right now, presents us with beautifully discounted stock opportunities, 3 of which I have for you today. So if you're a dividend investor, I want to go ahead and dive right into these opportunities with you. Now, if you're new here, I want you to know that I am a huge macros matters type of investor. And that essentially means I use macro insights to really understand where to invest, what stocks to look into, so on and so forth. Now, every Sunday, I deliver through on economic insights that I think everybody needs to know about. So make sure you're subscribed and you catch those insights. However, for today's video, I want to keep it to a 3-stock lunch CNBC type of breakdown. So without further ado, the first dividend stock today is Genuine Parts Company, ticker symbol GPC, which is engaged in the distribution of automotive replacement parts, as well as niche industrial replacement and electrical parts. Now, in other words, we're talking about, well, essentially dozens upon dozens of parts and pieces that you never probably knew existed, but play a vital role in your life to make sure everything that you're using throughout your day runs efficiently. Yes, that's what Genuine Parts Company is in the business of really manufacturing, making it quite an essential business, in my opinion, for all of us, and therefore then one heck of an investment opportunity when the stock slides, as it has been recently due to supply and demand shifts. And as of this video, the best part here is Genuine Parts Company is down on the year, down by almost 20%, trading for $133 per share at a PE ratio here of 15.1, which makes for one heck of an opportunity considering the role that it plays in our everyday lives, to which we can then look into history and let Genuine Parts Company speak for itself, as it's appreciated by over 117% over the last decade. Now, as for analysts, they foresee upside 11% worth of growth coming our way here with Genuine Parts Company, hitting about $150 per share, more precisely $149 in due time. Not to mention insiders who have been buying, and a mixed bag here from hedge funds as well, so we see some buying amongst smart money. But here's the best part: as dividend investors investing into Genuine Parts Company, we're going to be able to enjoy the dividends. Taking a look at their dividend insights here, we have Genuine Parts Company that continues to deliver through at a 5.73% growth rate, a yield at 2.84%, and likely to remain reliable here with 66 plus years worth of dividend growth. Next up, a Minnesota-based food company that was founded all the way back in 1891. We have Hormel Foods, ticker symbol HRL, which is in the business of producing and marketing various meat and food products to retailers, food services, and commercial customers. We're talking about like school cafeterias and the alike. So again, just built-in reliability given the nature of the business. However, during times of economic hardship, like we're experiencing right now, the stock does wavering. This leaves Hormel Foods in a state of distress right now at $32 per share. That's about 26% worth of a decline year to date with a PE ratio at 20.4. Now, think for a moment, instead of dining out, you can load up on a bunch of shares worth of Hormel Foods and enjoy the taste of wealth after its rebound. After all, we have 85% worth of growth over the last decade. As a matter of fact, smart money has been so confident about Hormel Foods, they've snagged up over 238,000 shares worth of Hormel last quarter. And in terms of Hormel's dividend, you're going to love this. Their insights are coming in at 57 plus years worth of dividend growth at a current rate of 7.96%, along with a dividend yield year of over 3% at 3.35%. Now, investors, this next dividend stock is one that I have mentioned numerous times here on the channel because of its sheer ability to fluctuate to sky highs and then hit lower lows amidst volatility. It's T. Rowe Price, ticker symbol TROW, which is a global money management firm. But here's the deal when it comes to T. Rowe Price, and we have to recognize this as investors. Just take a look. About 5 days ago, T. Rowe Price jumped from the lows of $90 per share to $97 per share, and then back to $94 per share at present with a PE ratio of 13.6. And what remains important to note is that last week the market anticipated a hike in interest rates, but then we stayed the course. I'll say the Federal Reserve stayed the course, and however, there was a hawkish tone, which did in fact make the stock waver back to its current levels. Now, why does all that even matter? Well, for a company that has its assets wrapped up in the NASDAQ, higher interest rates are not good for those businesses, and therefore, T. Rowe Price certainly pays the ultimate price in terms of its stock share price. And we see that so as it remains down year to date by over 10%, but we can in fact see that twice already this year, the market's reaction was positive when the Fed wasn't as hawkish. And moreover, over the last decade, we have T. Rowe Price soaring by over 67%. Now check this out. We also have hedge fund activity when it comes to T. Rowe Price, increasing their positions quite a bit lately, and I do believe that we will get even more of an increase should we finally make it to the end of this tunnel and flip into more of a bull market. But until then, how about enjoying a 5.10% dividend yield that has been growing steadily here by 12.73% over the last 5 years, and here now we have a dividend history of 36 plus years worth of dividend growth. Now, investors, there you have them, 3 dividend stocks to buy ASAP for the longer term win. Comment down below to let me know your thoughts on these 3 dividend stocks if you have better ones in mind, and of course, subscribe to never miss a single dividend stock idea.